This is a trade recap for Thursday, May 7th, 2026. Number 5 of 10 for phase 5 of one and done, our exercise in building consistency and discipline. Asterisks on the total of 10, probably going to push that out to, I wouldn't be surprised if it's at least 15, if not longer. One and done was a concept and exercise created by my coach and mentor, Pat Mitchell, who runs Trick Trades. We'll get to that in a minute. But basically, the premise here is to only allow yourself to take one trade per day, and ideally the best trade out of all the opportunities presented. And typically that is also coupled with first a trigger. Those two things tend to coincide very, very frequently. So with that being said, if you're new or struggling with day trading, these are the kinds of things having a coach or mentor, especially a good one, like Pat, who's actually phenomenal. Really, again, that's what you're paying for, and that's what you get. You get these tools and approaches to really help you get yourself squared away and doing this on a professional level, as long as you're willing to put in the time and the effort. So with that being said, if you are interested, jump over to tricktrades.com. You can read about the service and what he offers. You can also read up about him and kind of his backstory. He's been at this for over a decade now, and he proves that every day live on screen share before and during trade sessions. And if you would like a sampling of the information he puts out, he also has a YouTube page. You can find that at Trick Trades as well. Like I said, he's been at this over a decade now, and he has over 1,700 videos on there. It is a massive library of information. It'll just be extremely difficult for you to pick out all the information in these videos and put it all together yourself in any kind of reasonable time frame. So I highly recommend just learning directly from the man himself. And if that's something you're interested in, check the description below. You'll find some links to the memberships. It'll save you a little bit of money your first month, so you can try it out. Now let's go ahead and jump into the charts. Okay. So if you're new here, the way this works is we only trade SPY and Qs, just those two. We don't trade anything else. This top row here, this is SPY. This bottom row here, this is Qs. On the left here, these will be our daily charts. In the middle, our 1 minute intraday charts, and I keep my order execution here on the right because I like everything kind of on one monitor, so I'm not having to look all over the place. These blue levels you see plotted. These are the levels chosen by Pat the night before and the morning of a trade session. And then he builds our trade plans around them. Once he sets these levels, they do not move for any reason. And he is a master at picking these levels. Now, some additional things you'll see on here, these dash red risk lines, that's I like to define my risk visually. That's just a personal preference of mine. He does not do that. You also see some yellow levels drawn here, and that's just kind of those intraday support resistance. Use them as, profit targets or just areas of thing to watch. And that's more or less how all this is laid out. So after yesterday's kind of ridiculousness in terms of the move upwards, Qs was gapping up a little bit along with SPY, not massively. And we just kind of needed to wait and see what this thing was ultimately going to do. Which is all, you really can do at all-time highs as well with this level of a rational market. And Pat was, again, recommending how to trade this very incrementally and has been for the past few days. And that is probably the best advice you could follow right now. And again, another reason why having a coach and mentor really pays for itself is because they will keep you from trading the market the wrong way at certain times. So on SPY, we are opening above this level. So we were going to see if we could wait for it to come down into this level and get a reaction of some kind. On Qs, we were also looking for it to come down into this level to see if we could get some kind of reaction. and see what happens. Q's was much closer than SPY. So it's one of those things where, because of that, you have to be a little bit cautious, because as Q's is coming down, if SPY chooses to push lower, that might drag Q's lower to the point where it puts you past your stop, or again, puts you into more of a management mode as opposed to, again, trade mode and profit taking. So at the open, started coming down, and Q started coming down, came down, executed Q's with 2. Stripped out 1 on the first kind of reaction, then held 1 for a little bit more. Wasn't overly, again, I would say, optimistic that this was actually going to work out, simply because the way SPY was kind of just had this really controlled kind of grind down. And it was one of those things where it looked like, again, it was just had the potential to bounce either, again, off the opening price of pre-market or this level here. But again, it was hard to say with just how it was kind of moving down. But Qs, again, well, typically they can follow each other, kind of did its own thing. You can see they're a bit divergent in terms of like the direction there, especially at the open. So here is the entry. So it comes down, get entered with 2. Because I entered with 2, I wasn't really looking to accumulate anymore, just because of the nature of what was going on between the 2 charts. Kind of get that first reaction, pay out 1, push a little bit more, paid out the other. So it's one of those things where didn't need to really do all that much per se to get in a nice trade. And then again, because of one and done and kind of that first to trigger mentality or approach, that was it for me here on the day. But as you can see, SPY, as I worked down into this level, came into it, and risk being down here came down, you would have entered and it would have worked. I got just even up to here, came down for that confirmation. At this point in time, Q's was getting a little ahead of itself, you could say. And the interesting thing is also at this level. So the question is, does SPY just reject this and never come back? What does Q's do? Ultimately, like Q's came down, held in here, which allowed SPY to hold in here. And again, off we went. So again, opportunity on Q's, an opportunity on SPY. Then you had another opportunity on Q's. But SPY, that was pretty much it for the morning session. So as you can see, both offered opportunities. SPY was pretty much just along. If it had sliced through and come back up, we could have taken that short again if that was the first trigger, or as another opportunity potentially if you're in the position to take more than one trade in a day. Q's again had this long here, had another long here, and then another short right here, which again, because if you entered off this one, that's the thing guy kind of measures it worth it. There's enough meat on the bone, as Pat would put it, is that again, if you entered here, again, you need to be basically out coming into this area, because that's where it can hold and push, which is what it did. So all in all, P&L on that was, for those 2 contracts, was $31. Nothing spectacular or out of the ordinary, but again, that's what you need when you're grinding or building a small account and building up that experience. Again, small incremental wins is perfectly acceptable, especially in a market like this. Because if you were to throw size in this market, you could very easily do some serious damage into your account very, very quickly. And you're probably not going to have the discipline and emotional structure to really withstand that and continue to make good decisions, especially that day. So again, does revenge trading enter the scene, and then all of a sudden you're dealing more damage to your account as opposed to just doing it the right way. So that's how I traded this morning. All in all, good in terms of focus, emotions. Can't really think of any like emotional pops or anything or anything like that. So, which is good. Calm, relaxed kind of state. And that's one of those things that, again, that we're kind of focusing on right now, trying to do. get ourselves in a better position in terms of mental and emotional states, and having, again, basically the almost like the building the muscle memory to be in those states when trading, um, and kind of seeing how that impacts things. And so far, again, it's one of those things where when you kind of have that under control, like anxiety, like fear, panic, anxiety, being on edge, like stuff like that. Really, again, you don't need any of that stuff. Either trades work or they don't, and you just respect that fact. And it's something that I started putting into place back when was doing one and done. I think phase one of one and done a little bit more earnestly. And something that Pat had said was going to, again, kind of just surrendering to the process and leaving kind of all that rest of that stuff out. Because if you don't, you're going to be chasing your tail, because your emotions will basically rule you and you'll make poor decisions. Or you'll expend your mental capital and then make poor decisions. I mean, that's one of the things about day trading that kind of gets overlooked, is it's not all about the charts and your executions. Just like it's not all about making money. If you trade, as Pat puts it, trade well. So if you do your job, you do it well, you do it properly, money or profit will be the byproduct of that. Well, in order to do all that kind of trade well, you also need to have yourself together. You have to have your mind in the right place, your emotions in the right place, being disciplined, and all that. So it's kind of, again, these stepping stones. If one of those things upstream is out of whack, it's going to throw off everything else. And the more, again, you kind of dig into this stuff, you realize how much outside of the charts and actually trading is so important, and how much impact it has. And it's one thing that, like, when I think back on it, and just hearing, recalling Pat talk about those kinds of things, it's interesting because he's talked about it for years at this point, probably. Easily years. But again, it's not the sexy thing about trading. It's not the glitz and the glam, the money and all that stuff. It's not about hitting, these home runs and crap like that. But it is probably, not probably, but it is the most important foundational element to trading. How many people actually want to truly put in the time and the effort to work on that stuff? Honestly, probably very, very few. And that's why you see people, they'll come, they'll go, they'll blow up, they'll take massive losses, they'll have massive wins and massive losses, like this roller coaster of emotion. But this is what Pat aims to fix with the people he trains. So if you're interested in learning how to do this, I do highly recommend you check out Pat Mitchell at tricktrades.com and sign up for a membership and give it a shot. Because chances are, if you're having issues with your trading, it may go beyond what's happening in the charts, and it may be more up here. So with that being said, that is all I have for this one, and we'll catch you tomorrow for the next. Other than that, have a good one, and we'll catch you later.